Now, there was a report late in the day that the plan to roll back those tariffs faces strong internal opposition in the White House and that no final decision has been made. But that wasn't enough to derail stocks today. The Dow rose another 182 points. We're now at 27,674. NASDAQ rose 23 and did hit an intraday high. The S&P added 8 points at the close for a record there. Bob Pisani has more on the day's action.
Stocks continued their record run on Wall Street, but ended well off of the session highs. The markets rallied right out of the gate. First on word from Chinese officials that the U.S. and China would both begin to roll back existing tariffs in phases, and then took another leg higher once sources inside the Trump administration reiterated that same report. Now, by the close, this is the problem, stocks slipped on a Reuters report saying the plan faces fierce internal opposition at the White House and no final decision has been made. You see how tough it is figuring out what's going on with tariffs. Still, big breakouts in trade-sensitive sectors helped fuel the record run today. We had 52-week highs in industrial stocks, material stocks, financials, and technology stocks. Bank stocks in particular rode the rally to new highs because of a big spike in bond yields. The yield on the U.S. 10-year Treasury note spiked to its highest level since August, having its biggest move in terms of basis points since right after the 2016 presidential election. On the flip side, more defensive, rate-sensitive groups, your real estate, utilities, consumer staples, they lag behind. That's been the story all November. Home building stocks in particular, Lennar, Pulte, D.R. Horton, they all sank 2 to 4%. Home builders have had a stellar year, though. The yield move could be a big deal for the markets because it might signal a further shift out of bonds and back into stocks. That would certainly put some real legs under this rally. We'll see. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.